On today's episode of the Cryptoverse, I would like to do for you what many of you say I do best, which is to soothe your anxiety. Almost every crypto news media outlet today is reporting pretty much the same headline. They're all about the United States Securities and Exchange Commission rejecting a whole bunch of Bitcoin ETF proposals. If you only read the headlines, then you may start to panic a little. But that's what you're doing here, right? You've come for a sanity check, so let me give you one. Now, I'll be honest, I did not know there were some SEC ETF announcements on the 23rd of August. Turns out, this was the due date for several Bitcoin ETF proposals. These proposals were from ProShares, Direction, and Granite Shares. You know what I don't like about these particular ETF proposals is that they would be backed by Bitcoin futures contracts on the CME rather than being backed by physically holding the Bitcoin. I much prefer the ETF proposals from the VanEck Solid X ETF, which is set to buy the actual Bitcoin and store it. Now, the VanEck Solid X ETF proposal is the one that's set for a decision on the 30th of September, and that was the one that recently got delayed in its decision from the US SEC. Now, the bottom line today is that the ProShares, Direction, and the Granite Shares ETFs have all been rejected by the SEC. Each ruling has its own publicly available document with the details. I of course have links to all of those rulings. If you're the type that likes to dig into the details, I will put the links to all of those in the sources. Now, CoinDesk points out in its coverage of this story that the SEC used exactly the same reasoning in all of its rulings for the rejections. So the reasoning is that, quote, the proposal is not consistent with the requirements of the Exchange Act, Section 6(b)(5), in particular, the requirement that a national securities exchange rules be designated to prevent fraudulent and manipulative acts and practices, close quote. To that I say, how come the gold and silver markets are allowed to continue trading in the way they have been? I mean, maybe there's an ongoing investigation there that I'm not aware of. It was just the first thought that came to my mind. What I think the SEC is getting at, though, is that even if they approve these ETFs, most of the Bitcoin trading volume is still going to be outside of their ability to police. As Todd Byrne points out in his article on the website for the Blockchain Institute of Technology, the largest Bitcoin exchanges are outside the USA. So here's a quote from the article. Currently, the largest crypto exchanges are based in Malta, in terms of Binance, Hong Kong, in terms of Bitfinex, and Luxembourg, in terms of Bitstamp. This means that investors in a Bitcoin ETF would still be at the mercy of price manipulations on these other exchanges. That price manipulation would affect the Bitcoin price across the board, and the SEC wouldn't really be able to do anything about it. Now, this is something that actually stems from the ownerless and the decentralized nature of Bitcoin itself. It's not like a United States-based financial product that people all around the world invest in. In the case of the Bitcoin ETFs, the SEC is trying to rule something that doesn't actually have a geographic location. It lives on the internet and is therefore above all national laws. If this is the real barrier, then there's nothing really any of these ETF proposers can do, because the problem doesn't actually lie in the structure of their proposals. It's more inherent to the asset class and the way Bitcoin works. The problem lies in the very fact that Bitcoin is a decentralized global asset that lives on the internet. Now, based on the way they've worded these rulings, it sounds like the SEC wants surveillance into all Bitcoin exchanges around the world, which would give them the ability to spot manipulation and then investigate it and catch the culprits. But to me, that almost sounds like an impossible standard. The good news is that despite this bad news, the Bitcoin price has stayed in the same range it's been in for the last 7 days. For me, that's a good sign because it means less and less speculators are in the market and there's more and more hodlers. Or at the very least, that there are fewer people in the market looking for very short-term gains. There's a lot more to say about this, but let's leave that for our discussion on social media starting right now. So that's all I've got for you today. If you thought this video was absolutely terrible, you can hit that button if you want. But if you liked it, hit the like button, get subscribed, and maybe check out my website. It's cryptoversity.com. You can take either one of my introductory Bitcoin courses for just $19.99. If you want to learn how to make money trading cryptocurrencies, then visit cryptoasset.school, where you can download a case study of one of my trades where I made 40% in 3 days. If you want to follow me on Twitter, it's at chrisjsconey, which stands for Chris Coney International. I put stuff on there that I can't make it into the show. If you want an email when new episodes are released, check out cryptoversity.com/notifications. If you've got a bit more time to check out another episode, have a look at yesterday's video. Other than that, I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.